Energy is the best performing S&P sector today, with commodity prices climbing. Natural gas futures hitting their highest level since 2014 again. Damage from Hurricane Ida continues to impact gas and oil production. And a lot of the energy names are getting a lift today. Antero, ConocoPhillips, Cabot, Cheniere. We spoke with the CEO of Cheniere last week. They're all higher 3 to 5%. For more on just how high prices could go, and I'm going to call it what is happening here, Dan Yergin is with me now. He is the IHS Markit Vice Chairman. He is also author of the upcoming book, The New Map, Energy, Climate, and the Clash of Nations, out tomorrow. Dan, it is really good to have you here. I have one fundamental question to ask you. Are those who blame the clean energy transition for rising fossil fuel prices correct in doing so? In other words, are these policy choices to make this energy transition resulting in higher prices of natural gas and oil?
Well, first of all, let me say, Kelly, it's great to be on. It's a new edition of the new map that's coming out tomorrow, brought up to date for the Biden administration and the Glasgow summit that's coming up. And you ask a profound question. I think at this point, you know, the clean energy, clean tech is a very small part of the overall energy mix. What we're seeing really is the economic rebound. There is some pressure against new production and investment, but basically, I think what we're seeing is the overall dynamic of the market. One place it does matter, one reason natural gas prices are up so high in Europe is because it's one of those times when the wind isn't blowing and you're not getting wind-generated electricity, and it's being replaced with natural gas. So that's adding to the pressure, along with China increasing its LNG exports and the economic recovery in the United States.
I guess to put it the following way, and Goldman has a note on this, we're going to speak with them, with Jeff Curry later this week, where they say that demand is outstripping supply. But my question is the supply situation different? Is it literally constrained? Is it capped because of net zero policies, because of the ESG move? In other words, normally if you had prices increase, you would increase supply to meet that. The markets would find a new equilibrium. What if that doesn't happen this time?
Well, I think what it is, I mean, you see it in some parts of the world, let's say the United States, where the shale producers are being very disciplined because they know they have to return money to investors. It's the second shale revolution is that return of money. You do have the Middle East very happy to step into any vacuums, lack of supplies. It's partly also this OPEC Plus is maintaining discipline. But I think we are moving into a period of tight supplies when you don't have the same type of investment that you've had in the past, and you start to have strong economic recovery. We've been through these kind of cycles before, and I think that's what the markets are telling us. And this winter, we could see natural gas prices a good deal higher than they are now if we have a cold winter. We still depend upon these commodities, fossil fuels, for 80% of our energy.
Absolutely. Natural gas is 40%, and plus gas to homes for heating, I think, is about 50%. So I guess the reason why I put it this way is, if the supply is capped, then we should expect prices to stay high. And whether you're a trader or a consumer or anybody planning for it, you should expect prices to stay high. If the supply is not capped, if there's other weirdly bizarre reasons why this is all happening at the same time, and the supply is not capped and more is going to come online, then those prices are going to drop.
Well, I think that, I mean, you do have to look at those other factors, weather and so forth, and what happens to the economy. I think OPEC Plus, led by Saudi Arabia and Russia, are kind of saying oil should be in this $65 to $75 range. You have the Chinese starting to release oil from their strategic petroleum reserve to keep prices down. I was in a conversation this morning with the energy minister of India, who was very vociferous about high oil prices. So I think there's a countervailing process there. But we're going to be in a tighter period, which is, I think, what you're getting at, than what we've had in the last couple of years, where we've had so much extra supply.
Right. For one reason or another, you know, things are tight. And maybe it's one of those Munger Lollapaloozas where it takes 8 or 9 or 10 different things to keep supplies tight. But nevertheless, that's where we are. Dan, yes, quick final comment?
No, I was going to say exactly, because you could start to make a list of all the things that are there. And then you add, of course, the storm in the Gulf of Mexico, adding to everything else. So it's the accumulation of events. But the basic direction is towards tighter markets. And just look at the economic growth numbers, even with Delta.
Yeah, and it could be very uncomfortable dealing with those prices this winter. Dan, we appreciate your time today. Thank you.